Okay, in our problem today we have the worksheet for Webster Corporation. So we are focusing on making adjustments and calculating federal tax, as well as filling in our income statement and balance sheet columns. So our first adjustment here deals with accrued interest income. So that's going to be on line 4, interest receivable, and it will be a debit of that amount they gave us, so $275. And then its matching one will be down on, let's see, interest income, so put it down here towards the bottom. And it will be a credit of, same amount, $275. Okay, then next we have uncollectible accounts expense is estimated at 1.5% of sales on account. So our sales on account is $490,000, so you take that times 1.5%, and we would get $7,350. So this is going to go on allowance for uncollectible accounts. So here on line 6, and it's a credit, $7,350. And then our matching account is going to be uncollectible accounts expense, line 48. And it is a debit. Okay, next is our merchandise inventory. And for this one, we will take what we have in our trial balance minus this $90,000 to get our adjustment. And so this is up on line 7. And so our adjustment will be a debit of $25,800. And then I'm also going to go ahead and stick in that number they gave me. So it's going to be a balance sheet debit of $90,116.30. Okay, so then my matching adjustment is down on income summary. So line 29, and it's a credit $25,800. Okay, next is supplies. So this is going to be kind of the same thing. I'm going to take my trial balance amount minus this amount they give me to figure out my adjustment. So back up on line 8. And it's a credit of $2,300. And I'm going to go ahead and put in my balance sheet debit of $252.08. And then my matching is down on line 47 for supplies expense. And it's a debit of $2,300. So that's a credit. Perfect. Okay, next is our prepaid insurance. And so that is on line 9. And so once again, we'll take our trial balance minus this $3,071.60. And so line 9 as a credit is $6,000. And then our new debit in the balance sheet is that number they've given us, so $3,071.60. And our matching is going to be insurance expense, which is here on line 41. And so a debit of $6,000. depreciation expense for office equipment. Or annual. Oh yeah, annual. Okay. And so this will go on our accumulated depreciation. So line 11. And it's just going to be that amount that they gave us. So 2,800 as a credit. And our matching will be down here as an expense. So depreciation expense office equipment. It's a debit of 2,800. And our next one, same type of thing, except it's for store equipment. 1,760. So credit in the adjustments. And our matching will be depreciation expense store equipment. 760. And then our accrued interest expense is going to be the amount they give us for interest payable. So that is line 15. And it's a credit, 555.16. And then our matching is interest expense, 555.16. Okay, now we're going to use the tax table that's shown in the chapter and calculate our federal income tax expense and record the income adjustment. And before we can do that, it looks like we need to move our numbers over and do a total of those. Okay, so our first accounts are all balance sheet accounts. If we don't have an adjustment, it's pretty easy. You're just bringing over the same amount. So debit, $90,052.23. $200, $10,952, $275, $70,000, $94,200. And so here we would add, because they're the same, we have a trial balance credit and an adjustment credit. And so any credit, $7,394.64. Office equipment is a debit, $27,940. Accumulated depreciation, we'll add them. It'll be a credit, $8,058. And store equipment is a debit, $22,199.20. These are a credit, so we'll add them. $8,058. I have the wrong one up here. Go back to our office equipment. That should be $9,535. And then notes payable will be a credit, $14,400. Interest payable, $555.16. Accounts payable, $60,106.18. Income tax, $1,652.40. Social Security, $1,549.82. Make sure that you do skip a line. We won't have anything for federal income tax yet. Medicare tax, $357.51. Sales tax payable, $6,652.60. Unemployment tax, $33.44. State, $225.72. Health insurance, $702.60. Dividends, $10,800. Capital stock, $100,000. Retained earnings, $59,241.54. And dividends is a debit, $43,200. Okay, now when I get to income summary, that is a clue to me that I'm now going to be putting my numbers in the income statement column. And so, income summary, credit, $25,800. Sales is a credit, $1,075. No, $1,078,868.30. Sales discount is a debit, $2,020.80. Sales returns allowance, debit, $8,247.20. Purchases, $737,464.80. Purchase discount is a credit, $5,183.60. Returns and allowance, $2,716.14. Advertising is a debit, $15,947. Cash short and over is a debit, $9.15. Credit card fee, $10,066.94. Depreciation expense, still a debit, $2,800. For store equipment, $1,760. Insurance expense, $6,000. Miscellaneous, $8,682.20. Payroll, $14,966. Rent expense, $28,915. Repair expense, $3,485. Salary expense, $158,964. Supplies, $2,300. Collectible accounts, $7,350. Utilities, $2,661. Gain on plant assets, $110. Interest is a debit, and we will add those to get $1,169.48 in our credit. Interest expense, we will add those two for the debit, $2,741.30. Loss on plant assets is a debit, $248. And federal income tax, we did not know yet, so we will leave that. Okay, this is the end of part 1, and you'll need to go and watch part 2.